What happened with rates this week? Why has there been so much turmoil? When is the right time to buy? When is the right time to sell? Are you hearing these questions? I know all of the realtors that I talked to this week are hearing these questions from their buyers and from their sellers. People are nervous. They're sitting on the sidelines. They think there's going to be some resolution. Is there going to be resolution? We don't really know. So what's happening? So markets this week were, as you saw, they were moving in both directions because investors were reacting to the various headlines. So there was headlines from the Middle East, and there was also new signals from the Federal Reserve. So in the Middle East, the headlines, as you know, were this strait is, well, first off, we could have kind of a world destruction happening, and that's a little scary for our buyers and sellers. And then at the last minute, that didn't happen because they're in negotiations and we have another 2 weeks, and now the strait is going to be open again. So then all of a sudden the markets responded very positively to that. We saw the stock markets respond positively to that. But then we don't know if the strait is actually really opening. Are ships actually getting through? What does that mean to our buyers and sellers? What that means to them is they are unsure if I should buy or sell a house. Should I make a transition? Should I move? Is this the right time? What's going to happen to oil prices? So there is some things that are happening in the Middle East that are affecting our buyers and sellers. But if they do open the strait, and when they were talking about the strait being open, that will push our rates a little bit lower, which we did see briefly this week. Now, there is also uncertainty with inflation, and inflation, as you know, causes rates to move back up. So there were some minutes from Federal Reserve's March board meeting that showed concern that this ongoing conflict in the world could start to impact the labor market. So if that happens, that could strengthen the case for a future rate cut. Now, at the same time, the Fed flagged the rising costs, especially from energy, as we know, and that can continue to affect household budgets and keep inflation elevated. I was just kind of scrolling through Instagram, and I did run into a reel that talked about how Home Depot is saying that people are not spending money. They are opting to wait. They're not doing house projects. They're putting those on hold. So that is all called discretionary spending. So that means that people are starting to have the oil prices kind of affect their bottom line budget. We see it here in the Bay Area with gas prices going up, that, you fill up your tank once, not a problem. You fill up your tank again. Okay, now I'm noticing. But once we go through an entire month of having higher gas prices, we're going to see that we have less money in our account to buy our clothing, vacations, house projects. So that is going to affect all of our consumers. So also, the Core PCE is a measure that the Fed uses to track inflation. That came in 3% year over year, which shows that inflation remained elevated even before the global tensions picked up. So even though we're seeing gas prices affect the cost in our bottom line budget, we're also seeing that inflation was already there. Just a little bit, not a lot. I think the Fed tries to keep it around 2%, so we saw it at 3%. So that's just enough for them to raise their eyebrow. On the labor side, the jobless claims rose a little bit this week, but remained within their recent range. So that signals that the job market is still stable overall. And I also saw an article in the Wall Street Journal about this. So they're saying that the job market is stable. Now, there are various people that we know that are being affected by jobs right now. One demographic that I know very well is the just graduated from college or about to graduate from college entry-level positions. These kids are having a very hard time finding entry-level jobs. For example, in marketing or business, there is just nobody hiring in the entry-level positions right now. So they're going to be out of a job, or they're going to be looking for a job as a waitress or something at Chick-fil-A to be able to live and, after you graduate. So those kids are suffering. The entry-level jobs are suffering. We know that the AI sect is really skyrocketing, but for how long will that be skyrocketing? Things that are taking off are, our electricians and our plumbers, but we already know that. So what does all of this mean for our buyers and for our sellers? So I've heard this many times. All of your buyers and sellers, or at least this is what they say, is that they're waiting for the perfect time. They're waiting to time the market. And the problem is that the market doesn't really work that way. There's no perfect timing the market. Instead, what we're seeing is we're seeing small little windows of opportunity that come and go really quickly. Like when the rates dropped a little bit this week, that just came and went quickly. When the rates dropped in February, maybe it was March, to 5.99%, that was just a little blip. Now it's the people that are ready, that are taking advantages of those ups and downs, that are the ones that are going to win in this kind of a market. So right now it's going to be really important for you to focus less on timing the market perfectly and being more ready when the right scenario comes up. So being ready, getting pre-approved, so that when you do see that right house that has all of the things that you want, you're ready to take quick action. If you want to refinance, being ready, having all of your documents all ready with the lender, so that as soon as the rates drop to that interest rate, that target rate, your lender is able to grab that rate for you. As a seller, getting everything prepared in your house, getting, fixing all of those items that you've always been meaning to fix before you sell your house. Now is a good time to do that, because it could be that all of a sudden all of this stuff irons out and then the window opens up and you want to be ready to list and get on the market quickly. So now is a good time to prepare. So if you want to sit down and talk to me about this, if you have certain clients that you are working with that are struggling because they just don't want to take that leap right now, instead of focusing on getting them to take that leap, what we're recommending is that you focus on helping them getting prepared. So how do you get prepared to move? How do you get prepared to sell your house? How do you get prepared to buy a house? So the way that you do that is you hire professionals. You hire your buyer's agent. You have a conversation about what your dreams and goals are. You hire your listing agents. You talk about what plans you have and when you want to sell your house, or kind of how you want to sell your house, why you want to sell your house. You hire your lender so that you can get pre-approved. You can get that bridge loan ironed out. You can figure out that financial plan to help you get from point A to point B, because it is maybe not the perfect time right now, but I can guarantee you that the perfect time will be coming. And are you ready for the perfect time? Because your competition is ready. Are you talking to your buyers, talking to your sellers? Are you, as a real estate professional, getting them ready? Are you getting ready in your business Because as you and I both know, as soon as things change, it'll be like a big fire hose coming out at it. When rates dropped to 5.99%, it was a fire hose. It was everybody wanted to buy. Now they wanted to get pre-approved and they wanted to make an offer on a house the next day. I cannot tell you how busy and crazy it was for a very short time period. So if you use this time to get ready, get prepared so that when that opportunity comes up, then you are going to be the winner in this market.